Hello, everyone. Welcome to the market opening bell on Thursday, June 5th. The Hong Kong stock market continued its upward trend on Wednesday. The Hang Seng Index opened 12 points lower, but then turned positive, rising by as much as 204 points to a high of 23,716 points. It closed the day up 141 points, or 0.6%, at 23,654 points. The Hang Seng China Enterprises Index gained 56 points, or 0.7%, closing at 8,576 points, while the Hang Seng Tech Index rose 29 points, or 0.6%, to 5,219 points. The total market turnover for the day was 212.6 billion Hong Kong dollars, with northbound trading turnover exceeding 106.3 billion Hong Kong dollars, accounting for nearly 50% of the market's total. Southbound funds recorded a net inflow of 3.516 billion Hong Kong dollars, down from 3.905 billion Hong Kong dollars the previous day, with notable net purchases including Meituan $1.414 billion, Alibaba $619 million, BYD $393 million, Innovent Biologics $367 million, CSPC Pharmaceutical $330 million, and CNOOC $280 million. Net sales included Tencent Holdings $1.436 billion, Xiaomi $1.375 billion, SMIC $134 million, and PopMart $107 million. According to statistics, southbound funds have net bought Meituan for 13 consecutive days, totaling 14.41 billion Hong Kong dollars. CSPC Pharmaceutical for 4 consecutive days, totaling 2.52 billion, and Alibaba for 3 consecutive days, totaling 1.649 billion. Meanwhile, Tencent has seen net sales for 4 consecutive days, totaling 3.067 billion. Technical analysis: the Hang Seng Index remains in a range-bound pattern, but the range has slightly shifted upward to 23,300 to 23,900 points. Mainland China's stock markets rose for the second consecutive day. The Shanghai Composite Index closed at 3,376 points, up 15 points, or 0.4%. The Shenzhen Component Index closed at 10,144 points, up 87 points, or 0.9%. The combined turnover of the Shanghai and Shenzhen markets was 1.153 trillion yuan, an increase of 11.7 billion yuan from the previous day. The renminbi US dollar central parity rate was set at 7.1886, down 17 pips from the previous trading day. In the Hong Kong market, automobile stocks generally rose. 5 ministries, including the Ministry of Industry and Information Technology and the National Development and Reform Commission, announced the 2025 New Energy Vehicle Rural Promotion Campaign. This initiative will select typical county-level cities with low NEV penetration and high market potential to host several dedicated events, radiating to surrounding townships and incorporating region-specific activities. The catalog includes 124 NEV models. BYD has 11 models selected, Geely has 12, Leapmotor has 5, Xiaopeng Xpeng has 4, and Tesla includes Model Y and Model 3. However, Xiaomi has no model selected. In contrast, some Macau gaming stocks fell against the market trend. Macau revised its full-year gross gaming revenue forecast downward from 240 billion peticus to 228 billion peticus, lowering the year-on-year growth from 5.8% to just 0.5%, with an average monthly gross gaming revenue of 19 billion peticus. According to the Macau Gaming Inspection and Coordination Bureau, the full-year gross gaming revenue for 2024 was 226.7 billion peticus. Ms. Ho Yin-mei, Deputy Director of the Macau Financial Services Bureau, stated that the adjustment reflects global economic uncertainties and changes in tourist gambling consumption patterns, while May's gross gaming revenue rose to 21.19 billion petacas. For January to April average was around 19 billion petacas, below the original 2024 budget estimate of 20 billion. She added that the downward revision reduces Macau's government budget revenue by approximately 4.5 billion. As previously noted, Macau's gaming revenue from January to May fell short of expectations, prompting the government's downward adjustment for the full year. Wednesday was the deadline for the U.S. to request its trading partners to submit their best offers to avoid a July increase in reciprocal tariffs. Trump hinted at potential trade negotiation challenges, but the market reaction was less severe than in April. U.S. stock indexes showed mixed performance. The Dow fell 91 points or 0.2% to 42,427, ending a four-day winning streak. The S&P 500 remained nearly flat at 5,970, and the Nasdaq rose 61 points or 0.3% to 19,460. The Nasdaq Golden Dragon China Index, reflecting Chinese stocks, climbed 144 points or 2% to 7,254. Most major tech stocks gained. Meta rose 3.2%, Alphabet 1.1%, Amazon 0.7%, Nvidia 0.5%, and Microsoft 0.2%, while Apple dipped 0.2% and Tesla fell 3.6%. Data from China's PCA showed Tesla's China-made Model 3 and Model Y deliveries in May dropped 15% year-over-year to 61,662 vehicles, a larger decline than in April and marking 8 consecutive months of falling sales. US ADP private sector employment rose by 37,000 in May, the lowest since March 2023, against market expectations of 115,000 and a revised 60,000 for April. S&P Global's U.S. Services PMI Business Activity Index for May was 53.7, up from a preliminary 52.3 and April's 50.8, indicating a significant acceleration from April's 17-month low. However, the ISM monthly survey showed the U.S. Services PMI fell to 49.9 in May, down from 51.6 in April and well below the expected 52, marking the first decline since June 2024. The Federal Reserve's latest Beige Book noted a slight decline in economic activity, with increased policy uncertainty and price pressures. 6 of the 12 regions reported economic contraction. 3 were flat and 3 saw slight growth. Due to an uncertain economic outlook, the Fed will continue to closely monitor data to adjust policy. Meanwhile, Trump posted early Wednesday, sharply criticizing Fed Chair Powell and urging rapid rate cuts, calling his performance unbelievable. Our stock pick today is Ascentage Pharma, stock code 6855. Ascentage Pharma is dedicated to developing innovative drugs in fields such as hematologic malignancies. Its core products, Overembatinib and Lisaftoxac, have global potential for treating major hematologic malignancies, including chronic myeloid leukemia, acute myeloid leukemia, chronic lymphocytic leukemia, acute lymphocytic leukemia, myelodysplastic syndromes, and multiple myeloma. According to a Frost and Sullivan industry report, the combined market size for these diseases is expected to exceed 166 billion US dollar by 2035. Over the past year, Overembatinib has seen increasingly widespread clinical adoption and growing clinical recognition, with its commercialization in China demonstrating strong growth. For the year ended December 31st, 2024, Overembatinib generated sales revenue of 241 million yuan in China, a significant 52% increase compared to 2023. As of December 31st, 2024, the number of accessible hospitals and DTP pharmacies nationwide reached 734, with the number of accessible hospitals growing by 86% compared to December 31st, 2023. With all approved indications for the drug now included in the National Reimbursement Drug List, it's poised for broader growth, significantly enhancing drug accessibility and affordability. In June 2024, the group entered into an exclusive option agreement with Takeda Pharmaceutical regarding Overembatinib. Under the agreement, Takeda will have exclusive rights to develop and commercialize Overembatinib globally, excluding mainland China, Hong Kong, Macau, Taiwan, and Russia. The group received a $100 million option payment from Takeda, primarily as intellectual property income, along with a $75 million equity investment from Takeda. Last year, the group's Suzhou industrialization base successfully completed the technology transfer and process validation for Overembatinib tablets and passed the GMP compliance inspection by the Jiangsu Provincial Drug Administration. This enables the Suzhou base to supply clinical samples globally and produce commercial Overembatinib formulations for the Chinese market, marking the start of the group's independent commercial production journey. The group is also developing its second core product, Lisavtoclax, for various hematologic malignancies. In November last year, the group submitted a new drug application for Lisavtoclax to China's National Medical Products Administration. If approved, the product is planned for launch in China this year, with regulatory approvals to be sought in multiple countries. Regarding its research pipeline, the group is currently conducting 10 registrational clinical studies, two of which have received US FDA approval, involving three late-stage pipeline candidates, Overembatinib, Lisavtoclax, and APG2449. The recommended buy price is 53.5 Hong Kong dollars, with an initial target of $58 and a further target of $60, and a stop loss at $50. I do not hold the aforementioned stock.